What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. Before we get going, if you're not already subscribed to the weekly newsletter, then go ahead and do that. What are you waiting for? Every Sunday afternoon, we send you 5 to 10 swing trade ideas completely free with detailed trade plans. We're also on Instagram, and you can find us at tradebrigade.co. I'll leave a link below in the description. And you can follow us there for morning setups and also some technical information every now and then as well. So without further ado, let's get into the video. As always, we have the broad market, SPY, the Qs, and IWM. Then we look at some companies: Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, Microsoft, and finally Amazon. As always, starting off with our SPY weekly chart, you can see we're forming what I would call a knocking on the door pattern, where we have 1, 2, 3, 4, 5 touches now at this resistance level here at the all-time high. Any sort of breakout above I could imagine, it would probably come up and test this resistance trend line. You can see that comes from touch 1 and 2 here, and there's a little ways to go if we got a breakout over this all-time high. That puts price somewhere around 306, depending on what time of the week and when this sort of happens. But any sort of breakout above, and I imagine that would be our next point of resistance on the upside. On the downside, our supports are mapped out for us. We have this set of highs in here, all these data points, the close of this candle, the highs, and you can see that's right around 297.88. We're going to go down to the daily and take a look at more detail. Our move up to the all-time high here around 302.11, you can see we didn't quite make it all the way to 302.63. It was sort of choppy up and down 2 days, up a day, down, back and forth. But there's still this glaring gap below in the chart. So that's something that you're going to want to carry forward and keep note of on any sort of big move to the downside. This gap fill could certainly happen, and that's going to be a fill all the way to 294.21 based on the high of this candle here. So any nasty downside move, and we're targeting 294 basically based on this line here. It's the highs from in here, this balance area, as well as the breakout point here. So keep that in mind on the downside. Again, like we talked about on the weekly chart, any sort of move to the upside, and we're looking at sort of 306 to 306.50, maybe even 307, depending on when we get up into that resistance trend line. So keep that in mind. On the upside, 50 SMA is above this level now, so it'll offer some bit of support in between this gap fill, but I wouldn't cross my fingers and hope for a major bounce there. So the Qs and tech in general doing a little bit better than SPY in the broad market. You can see that we poked above our all-time high here, and we set a new one at 195.74. That being said, we're playing whole and half dollars all the way up until we get to that resistance trend line, similar to the way we formed it in SPY. Just this time on the Qs, again, whole and half dollars till we get up into this level. That's going to be right around 200 to 250 cents, I would call it, somewhere in that zone. We are above this downtrend, so we'll get rid of that, or we'll keep it just in case we get a back test. How about that? So on the downside, a back test of this resistance trend line could certainly be some sort of support, some a retest of these highs, if you will. So that's right around 194.13. Any sort of move down below that, we really want to see this level hold at 190.72. Otherwise, we're in gap fill territory, just like SPY. 50 SMA, similar position as SPY. It's sort of in between the gap fill right now. Would maybe get a little intraday bounce out of it, but I wouldn't expect any sort of major reversal to the upside if we got to pull back into that level. And last but not least, for the broad market, leaving IWM zoomed out a little bit, just so you can see how relatively weak we are compared to SPY and the Qs. All-time high is way up here at 173.39, and we're still, somewhere about halfway on this pullback, if you will. And we're making a lower high now here. You can see we're sort of topping out even lower than our previous 1, 2, and even 3 times. So keep that in mind. IWM is certainly showing some relative weakness, although there was a nice day on Friday. Again, the market had a good day overall, and we're sort of forming this bull flag, if you will. We have the pull, and then the flag is forming here, so we're really looking for a breakout and price to maintain above 155 just about based on this level here. This wick above is a quick test above, but we really want to get above and see a breakout into some of this resistance levels before we really say, IWM is continuing its uptrend. We did break this downtrend line. From there, it's been the fake breakout a couple times, so we're going to be cautious here and see if we maintain, like I said, above 155 for the breakout above, or duck back down into this sort of zone, if you will, and this is just another fake breakout. So keep that in mind. That's certainly a possibility. Moving into our companies now and starting with Apple, you can see our uptrend is very well intact. We had a great week. All up days, even though these were red, we did start to put in new highs every single day. So that's really great to see. We are in blue sky territory. We're playing whole and half dollars on any sort of moves to the upside. On the downside, our support is mapped out for us. We want to see prices hold above, ultimately, this trend line here. Any sort of pullback into it is certainly buyable. This is a really strong uptrend that we've formed so far. So any sort of pullback into this dotted line could be a potential buy, at least an intraday bounce. But we have some levels before we get to that. We have 237.66 based on this level here. Once we got above it, that was sort of the trigger point and breakout point. So any sort of back test of that should act as support. Below that, we have these two touches as well as our previous all-time high, which went away when I scrolled, but that's at 233.50 just about here. And then there is a gap fill that has been unfilled here below us at 230.14. So keep that in mind if we get a pullback into this trend line. We have earnings coming up here, so keep that in mind if you're playing an options play. Obviously, the volatility will increase, prices will increase, and then as soon as earnings are released, all of that increase in volatility will be sucked out of your options. So be cautious with that. Netflix finding some support down here at a level we had mapped out right around 268. You can see we have a little bottoming, shape here, but you could also look at it as a bear flag where we have the pull and then the flag forming here. So the breakout point to the downside is really breaking down below that 268.12 level, in which case we would target our most recent low right around 252.30. Anything lower than that, and we're talking about 231.58, that is if this sort of downtrend continues. On the upside, if we see any more continuation, we're looking for resistance to come into play at 282.91, as well as that 50 SMA, which is starting to come down and coincide with that level. If we get above, we certainly have resistance up here at $300.25. You can see rejected, 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 and then it fell right down below it on that big gap up day from earnings. So keep that in mind on the upside. Tesla absolutely smoked everyone who was short. You see this big gap up. Not surprising. If you were sort of following along this uptrend that we had bullish movement, a nice little pullback and consolidation into the 200 SMA, boom, big gap up. I wouldn't gamble on earnings. I'm not saying that this was, an easy play to make some money on, but it makes sense that, we see bullish action, earnings come out, they're positive, and boom, we have a nice big gap up. The following day, Friday, was just absolutely monstrous. You can see the range on that day is $33.89. So that's, one heck of a day there. On the upside, we're going to have to look a little bit further ahead to see if we have any resistance more locally here. You can see we're above this one. I would call this our next sort of point of resistance. You can see these two inverted hammers here where the cursor is. And in terms of where we are in price, that's a little ways away still. That's 352.36. Any sort of move to the downside, we want to see this level hold at 295.69. Even the low of this hammer, if we get down into sort of the gap here, I would expect a relatively quick gap fill back down to this level here around 266.36. The high of this, whether or not it fills all the way to the 200 SMA and this, where it ultimately gapped up from, that's anyone's guess. But on the gap fill, I would look for this level certainly here, like I said, at 265, 266.36, somewhere in this area. Alibaba earnings coming up next week. You can see there, down here. So right now we're just caught in some consolidation. There's no real trend that's been developed. You can see our moving averages are essentially going sideways, which is kind of absurd for the 50 and 200 SMA to be going sideways at the same time. Normally there's some sort of overarching trend, but if there's no trend, there's no trend. So we're going to play it as no trend, in which case our next resistance point is up here at 179.37. Any sort of pullback off of that level or reversal here, I would imagine there's some support at the moving averages, but if we break down below, we're looking at 167.93, so 168 I'd call it, just to be a round number. Anything lower than that, we have this sort of zone here between 164.08 and 162 I'd call it here. So look for that to offer some support. That's also going to start to coincide as we continue with time with our support trend line. The overall symmetrical triangle that we're in sort of looks like that, and again, that's that dotted line there. So keep that in mind on the downside. Upside, I talked about if we break out over 179.37, we have our fake breakout above here at 184.10. Anything higher than that, or it's going to sort of coincide with, but we have this resistance trend line that's been developing. We could also draw on this point of resistance here, which is at 195.08. So any sort of major breakout out of this longer term symmetrical triangle, I'd be looking for resistance at that level first. Facebook just sort of chopping around and going sideways. You can see there's no clear trend over the course of, from here in early August to now. We're sort of just going sideways, like I mentioned. On the upside, our resistance is mapped out. I'd say 191.20 is certainly a knocking on the door pattern type of area. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 touches to that resistance level. If we get above it, I would imagine some sort of breakout. Our first would be sort of this 198.61 and a back test of this trend line, if you will. That's coming from here. And again, this is only 3 points here compared to the however many I said we have here. So any sort of test of this, if we get a move through it, then we could easily make it up to 205.39. We do have earnings on the way. So again, keep in mind all of those things about options and volatility, and be cautious if you make a options play. On the downside, we have our 200 SMA still upsloping, but coinciding with our 179.62 support. So any move into that should offer some bounce. And then anything lower than that, we have 176.68 and 173 just about. NVDA, just a gorgeous move out of this symmetrical triangle that we had talked about multiple times. We had the back test, now it's just been on a run. We are running into some resistance at 206.33. You can see over here on the right. So keep that in mind as resistance here. We might see some sort of pullback. If we do, we're looking for a move down to 192.95. So 193 just about. That should offer some support on any sort of pullback here, and then a continuation up through 206 if we get the breakout above. Resistance over that, and we're just going to look over here to our left. You can see we have some price history right around 223.04. So keep that in mind if we get the breakout next week. That could be a longer term target on the upside. On the downside, if 192.95 gives, then you can see we have sort of the zone in here where we have some previous data points here at 188.40. Anything lower than that, then the uptrend is sort of tarnished. But I would still say it's putting in a higher low as long as it maintains above 188. But then we have 178.68, 173.47 as well. Microsoft starting to form its own knocking on the door pattern. 1, 2, 3, 4, 5, 6, and 7 touches to this resistance level, as well as the back test of this resistance trend line now that we're below it. So keep that in mind. Any sort of breakout will put us back in blue sky territories, which means we're playing whole and half dollar resistance levels intraday. Any sort of move to the downside, and our levels are mapped out for us. We have the 50 SMA below us, which should offer support. You can see it's done so in the past here. On a first touch, so any first touch to it should offer an intraday bounce. Anything lower than that, this low here should offer some, this tail here, that's right around 135.68 just about. And then even lower than that, we have our trend line support that's been in play for a little while now. Anything lower than that sort of gets me a little concerned. I would want to see it maintain above. So anything below, though, we're looking at support at 130.67, then the 200 SMA here as it starts to coincide with that level as it continues to move up. And then anything lower than that, certainly uptrend is tarnished, and that's at 123 here. So Amazon had a very interesting Thursday afternoon and Friday morning. You can see major gap down after earnings here. Below our support line, really, which was pretty interesting to see that we didn't have a sell-off below that level, but all day it recovered and it closed just, well within range of Thursday's close as well. So interesting to see there. Lots of green volume. Obviously, people thought the stock was on sale, picked it up, and continued to push prices higher. Again, I'm not sure how we're going to fare once we get into these moving averages. You can see it's offered resistance all through this zone. So any sort of test of that, and I would imagine we get a little choppy. And anything higher than that, we have our resistance zone up here that I've talked about being pretty strong. You can see rejection, 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 fake breakout, and then never really getting any traction above this level around 1833 to 1851. So we didn't make it all the way down to our target at 1672 on the gap down, but I would still keep that in mind as support that you can see from back here in June. that did offer support. So keep that in mind as a downside reference as well. Right now, again, I think the major contenders are the moving averages. So keep that in mind as we go into next week. That's going to wrap up this week's episode of the Weekly Watch List. Again, if you're interested in receiving 5 to 10 swing trade ideas for free, then go ahead and sign up for the newsletter in the first link in the description. Follow us on Instagram for a trade plan and setup every morning. And if you enjoyed the video, leave it a thumbs up. If you have any questions or comments, want to see a stock reviewed, let me know down below in the comments section. And as always, subscribe for more of this content. I wish you a green trading week.